This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. It is Tuesday, June 4th. This is Not Your Advisor with NYU Grad. I'm going to cover later on the housing stocks and home builders. So I'm going to dedicate this to the housing market and summer housing vibes. But let's jump right into the breadth numbers, and I'll talk a little bit about complexion here. We had 170 new highs versus 213 new lows. 38% of stocks were advancing versus 59% declining today. Looking at the 50-day moving average, we had 47% of stocks below its 50 and 35% of stocks below its 200-day moving average. Now, it was a mixed bag. I think the Mag 7 held up best today. Taking a look at mega cap land, you have Microsoft up 0.6%, Apple up 0.17%, Google up 0.4%, Meta was red, down 0.1%, Nvidia up 1.25%, Amazon up 0.56%. It was pretty muted, let's just say that. When you take a look at sectors, it was also muted to the green. Consumer defensive led the way, but it was only up 0.6%. Real estate, counterintuitive here because I'm not sure what is in the basket of the sector analysis. It might include commercial as well, but real estate as a sector was up 0.63%. I'm going to be going through residential builders later for the paying subscribers. Healthcare was up 0.4%, communication services up 0.3%, tech was up 0.16%. These are all percents. The leading to the downside, you have basic materials down 2.1%, energy down 1.2%, financials down 1.02%, industrials down 0.4%, consumer cyclical down 0.28%. Just kind of continuing down this rabbit hole. I do want to mention that what stuck out was the lack of volume. Now, if you include after hours, the SPY is trading 34 million shares for the day. But at the close around 4 o'clock New York, only 31 million shares of SPY traded. The average volume right now, because the average volume keeps dropping every day, is 65 million shares a day. So we're less than half the average volume. And I remember when the average volume used to be 80 million shares a day on SPY. So that's pretty precarious. What else stuck out? Precious metals and commodities continues to sell off. I had specific notes and messages to the paying members on decision time, which I'll cover a little bit during the paid segment. And at the last 10 minutes, we had another late stage rally. But with this low volume, I have very mixed feelings here because you have the Nvidia split that starts on Monday. Next week, you have the FOMC meeting. You have obviously in June, at the end of June, you have the first presidential debate. There's just a lot of cross currents right now. And I watch breadth every day. I watch many indicators every day. And all the evidence in front of me tells me that the market in this low volume environment is easy for the establishment to manipulate this. And what do I mean by establishment? I keep referring to the button, the easy button, right? It's the Federal Reserve, the Treasury, the current Biden administration, the Wall Street echelons, it's very easy for them with their computer trading algos, access to our orders, the passive investing of all those who are still employed, who keep feeding the 401k Roth IRA machine. It's just easy for them to pick a spot on the chart and say, you know what, by this date, I, Jamie Dimon, declare, Dow 40,000. And we get there. But I have a sneaky suspicion that sooner than later, the ability to continue this charade will end. The other thing that was notable was this Roaring Kitty nonsense. And they're like, they're going to ban Roaring Kitty's E-Trade account because it's manipulation, yada, yada, yada. It's all BS. If Roaring Kitty becomes a trillionaire because of these X tweets, that's the American dream. The people that should be banned are those that are following him, trading GameStop because he posts a kitten video. Those are the ones that should be banned. The fact that this continues to happen is just befuddling to me. And I get it, right? It's human nature to want to make a quick home run. But they've already lost so much money. And it just seems like the interval of time between each Eiffel Tower move in GameStop is shrinking. So the first one was a few years ago. Then, this year, the next one to 80. And now this week, to 40. Like, how many more times is this going to happen between GameStop, AMC, and all these other BS trades? Even my dog agrees. It's all BS. So let's keep going here. So what was strong today? You had, these are all percents, okay? Coinbase up 5.5. Marathon Digital up 4.8%. Affirm up 4.6%. Spotify up 4.16%. BITU up 3.7%. Palantir up 3.6%. Bitfarms up 3.4%. Dell 2.8%. Carvana 2.16%. And Adobe 2.13%. What was weak? Pan American Silver, and I want to preface it's going to be a lot of precious metals. Pan American Silver down 6.9, VinFast Autos 5.5, Barrick Gold 5.3, PLG 5.2, Kinross Gold 5.1, SVM 5.1, SILJ Junior Miner ETF 4.99, Harmony Gold 4.58, Nova Gold NG down 4.26, Wheaton Precious Metals 4.16, New York Community Bank 3.99, GDXJ 3.9, GDX 3.7, Silver Futures Contract 3.7, SBIT 3.61, Crocs 3.3, Lyft 3.3, ACMR 3.2, PSLV 3.2, SLV 3.1, Uranium 3, KB Homes 2.99, DRV 2.95, Hovanian Homes 2.93, Las Vegas Sands 2.88, Instacart 2.8, Natural Gas Futures 2.7, Wayfair 2.6, UCO 2.67, DJT 2.6, Beezer Homes 2.6, TriPoint Homes 2.6, Toll Brothers 2.4, Reddit 2.3, CPNG 2.2, Pulte Homes 2.2, TBT, which is the inverse of bonds, 2.2, AMD 2.1, XHB 2.1, Red Rock Resorts 2.09, DHI, which is DR Horton Homes 2.08, Biddy BITI down 2.04, Restoration Hardware 2.03, and SRS 2.02. And I do want to preface that during the paid portion of the podcast, I'm going to cover housing. But for free members, I've linked on the show notes at the top a short video clip of a Las Vegas Beazer home site where there are 14 home sites or lots that are like 8 of them where the houses are ready for move-in, and they're basically having a lottery for those 14 home sites for you to have the right to buy that home. And you can see it's palpable, the anxiety of these buyers. And they're all probably from like California, trying to flee all of the taxes and the high cost of living in Cali. But you can almost sense that desperation in the room. Everyone just wants to have an opportunity to buy that home for $500,000. This is what happened in 2007. I have no doubt that there are pockets of housing and real estate that are still hot, like this video, like in Connecticut, like in New Jersey, because these markets have low inventory, and a lot of folks are still leaving high taxation, high cost areas like LA, California in general, like Manhattan, leaving for Connecticut and Westchester and New Jersey and Long Island. So that's what's going on with certain markets. But as an aggregate, when you look at the Sun Belt, like Phoenix, Arizona, Texas, Austin, Houston, Florida, Charlotte, Atlanta, where all of the home builders have a plethora of inventory, you already see pricing pressures go south on the price. But with that said, free members, thank you for tuning in. I will see you all after the Wednesday session. Paid members, please stay on so we can go over some housing and home builder stocks. That's my train.
Stand clear of the closing doors, please.